What's up, guys? Sam here, kicking off the noon session for Thursday, June 8th, 2023. Thank you, Mirza. Good to see you. All right. Well, today we do have something on the docket. I'm going to be talking about one of my favorite things, and that is the concept of LMT. And I think it's a concept that put it together in every trade. I think it'll overall help you kind of stay on the right side of momentum and structure. Have you ever gotten into a trade, lets it go long, and the moment you buy it, the stock goes down? Or you want to go short, and the moment you buy it, the stock goes up? Has that ever been? It happens to all of us, right? So how can you reduce that? Well, a lot of folks like to do things at specific levels, right? Like, let's just choose an arbitrary level. Let's say 14,500. Like, if it gets up to 14,500, I'm going to buy it or I'm going to short it, right? But if you can expand on that and instead make it three-pronged so that you're looking at a level and then momentum and then trigger, then I think it overall will help you with your batting average, if you will, for trading. So let's go over a couple of examples here, and feel free to ask any questions in the chat if you have any. And I'm going to start with kind of a idealized example, just because Netflix has been so clean. But feel free, if you have any tickers that you want to look at, we can apply the same concept to your ticker, and I think it will be just fine. So let's start here with Netflix. Now, for this process, you don't necessarily have to have like a three-panel approach, although I do think it really helps, right? So you'll find that I have a weekly over here, a daily here, and an hourly over here. If you're more of a traditional slower trader, you probably don't need the hourly, although it does help you with precision. But I think at the very least, most people need to have a weekly and a daily. Or if you're a faster trader, then a daily and an hourly, right? Something along those lines. So let's just go through, use our indicators. And the cool thing about what I'm about to show you here is you don't need any premium indicators. Like, it's helpful if you have one of our indicators, even more helpful if you have mine. But you could do all of this that I'm about to show you with completely free indicators, right? So regardless of the system that you employ, that you use, the strategy should work for you. Before we dive in, though, let's just cover one quick point. So you'll note that I have the squeeze. Well, let's start at the top. I have price. I have the squeeze. I have the trend offs. And I have the high-low. Now, you may or may not have that, but you probably have price on your charts. You probably have the squeeze on your charts. And let's say that you want to use something else here. Let's say you're using TG's Moxie. Let's say you're using MACD. Let's say you're using RSI. Those are completely free. 10x bars, Taylor's Big Three. It doesn't matter. The point I want to make here is I have two momentum indicators because it's like being a carpenter, right? You have a hammer and you have a screwdriver. And what the market presents you is what you will use, right? So you do need to have a good hammer. You need to have a good screwdriver. It doesn't make sense to have two hammers, and it doesn't make sense to have two screwdrivers. So before we dive in any further, look at your own screen. Ask yourself, what is my trending indicator? Do I have one? What is it? What is your trending indicator? For me, it's this one, right? So this is going to be the one that I'm looking for trending moves. You know what they look like: 3 up, 2 down, 3 up, 2 down. And then ask yourself, what is your range-bound indicator? For range-bound indicators, you can use something free, like a slow stochastic. I actually think it's pretty helpful. I would advise that you expand it to a 21 period, not using the one that's out of the box. It's a little too fast, but it make it a little bit slower. It's better. And it's completely free. You can use the High-Low Pro. You could use David's Ready Aim Fire. And those would be probably the main ones, with the free one being the slow stow. So as we go along, you'll note that there's going to be one variable, two variables in the squeeze, 3 variable, 4 variable, right? And it sounds like a lot, but you'll see how quickly we can get through it. So what I want to see price, which is the most important variable, right? You can get by with everything except, you can get rid of everything except price most of the time, is I want to see the averages stacked for trend, whether it's up or down, and I want to see them angled. Having the angle up is pretty important, and you can see it pretty clearly here on Netflix. There are times where you'll have the weekly chart or any chart where you don't actually have that. You see how you have a little bit of an angle here, the white, green, blue, that's correct. But then on top of that, you have that big weekly 200 sitting flat. In that instance, what do we call this? We'd probably call this neutral plus, right? You can call it whatever you want, but it wouldn't be wildly bullish quite just yet because it doesn't have that level alignment. But it's certainly not bearish because underneath the 200, it is correct, right? So let's just go through Netflix real quick. For the price here on Netflix, and here's going to be our grading key, if you will. A plus is bullish, a minus is bearish, and an NA is just neutral. So over here, bullish, bearish, or neutral. Neutral. Okay. The squeeze looks pretty good to me. I would say that's a bullish squeeze. The trend oscillator, see how both lines are above the middle, but the red is on top of the green? If I'm being really specific, that's bullish neutral, but I'm just going to give it an NA. And then down here on the high-low pro, because my momentum indicator is neutral, I need to see thrust higher. You see how you have the last signals that you have are green arrows? That gets a check. Let's go to the daily. The daily price gets a check. Moving averages are stacked and angled. The squeeze, as it sits, it's fine. I'll still give it a check. The trend oscillator, green is above red, green is climbing. High-low pro, the last signals that you have, arrows, check. Lastly, the hourly chart. The hourly chart's pretty easy. Stacked moving averages, gets a check. The squeeze as it sits, that gets a check. Trend oscillator, very clearly, that's bullish, that gets a check. And then the last signal that you have here is actually a thrust lower signal. So because it's not, because it's still correctly positioned, I'm just going to give that an NA. I won't go out of my way and give that a bearish quite just yet. So if we add it all up here, we have NA, check, 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 3. On the daily, plus 4. Weekly, NA, check, plus 2. So 3, 4, and 2, that equals 9. We end up with a positive 9. And there's 12 possible bullish points. So this is a bullish chart, right? Now, of course, you're just going to look at it and say, duh. But if you go through this process every time, it'll help you. So then what do we need? Well, we're looking for a level, we're looking for momentum, and we're looking for a trigger. So I'm going to kind of range pick this because I actually remember the exact moment that we were last looking at this. And let me make this a little bit bigger. And the last time that this came up was right here. And folks were asking about this pullback right there. And I said, we went through the process and we said, okay, the weekly is good enough to buy. The daily is good enough to buy. The hourly, however, is good enough to buy. But you see how when we looked at it right here, the trend oscillator is correct. But you see how you had thrust lower? So what did we need? We needed that last little bit of a turn signal, right? We needed to see that one little thing that was out of kilter, a line. And then from there, look what happens. You have a level here at the hourly 200. An hourly 200 in an uptrend will usually be a level. So level gets a check. Momentum gets a check after this yellow arrow. And then from there, you just need a trigger. Now for the trigger, you can use a lot of different things. You can use a closing bar if you're trying to get long above the high of the low bar. You can use a shorter term moving average crossover. So since this is an hourly chart, you could probably use something like a 2150 5-minute bullish cross as your trigger. And then guess what? You have all 3 pieces. Because if you didn't have this and you only had the level, and this just kept going lower, that tells you don't yet have a trade, right? So this is just one example that I remember very clearly of everything of being aligned. So LMT, level, momentum, and trigger. So I'm going to take a quick pause to see if you have any questions. Eric said, that's me, that's me. So if you have any questions, do ask them in the chat. Where does volume participate in the analysis? Ideally, if you're going to see a signal, you want it to have big volume. But volume, I would not say is overly important for what we're doing, right? What's important for what we're doing and what we're trying to find is the structure of the chart in terms of, is it a trend? Is it sideways? It's really important to be able to isolate that. The structure of the chart, number one, and the positioning of your momentum indicators, number two. From there, volume, you can add a little bit of a footnote there for volume, but I wouldn't necessarily make it a huge point. Is it better to have volume if you get a signal? Yes. Can you get an equally good signal on low volume? Also, yes. OBV on balance volume. You can factor that in, but again, I would say volume is very tertiary. For example, if I had all three of my signals, right? Let's say I have a level, momentum, and trigger, but then the volume is poor. Let's say it's below average. That's not going to stop me from taking the trade. If the level, momentum, and trigger are in place, and you have big volume, is that a positive? Yes. But would I view low volume in that situation as a negative? No, personally. LMT on AMAT. Yeah, throw a couple of tickers my way because I had Netflix here just because I remember this exact spot so well because we covered it so much. It was right there. You just look for that to happen and then look from there. Every green arrow pushes you higher and higher. So let's look at the AMAT here. Okay, so since you guys are pros at this, I'm just quickly grade out the chart. Checks are bull, X's are bear, and is nothing. I'm giving it an NA because you see how the squeeze is actually declining. That's not a bang, but it's not as good as it could be. The squeeze here is firing long. That's a bull. And you'll do this very, very quickly once you've done it in times. Okay, so 4 checks, 3 checks, 3 checks. 4, 3, 4, 3, 3 is 10. 10 out of 12. Bullish. That's a stock we want to be only trading long, right? Pretty obvious, right? If bearish at all, I would have a negative number here. But plus 10 out of 12 is really bullish. So it's a stock that we want to be bullishly. So the thing is, where's our level? Well, normally your level can be something like a 21 EMA if you have a trend, right? Now in this instance, it is so strong. The only thing that I was missing here, because we picked some of this up yesterday, is a higher signal on the hourly chart, right? Because everything else had already checked off. The weekly was good to go, daily was good to go, and this was good to go the whole time. See how the trend oscillator is still good, even if as you're going sideways. So the only thing that you're missing here is that, and in this case, you did a pullback to the 21, which would be somewhat of an ideal level, but you did get a pullback to these recent lows, right? So after the pullback, you wait for your signal, everything's aligned, check, 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 and it's a long. Another one I picked up yesterday was TTD. I'll show you this one. And if you have any other tickers, throw them in the chat. So admittedly on this one, I got in a little bit early. It wasn't a super clean signal. And I may actually not stay in this much longer now that I'm looking at it. But let's just do the process. We're just going to give that a big check. You know what I'm looking for here. Let's give this a check. You know what I'm looking for here. And then on the hourly, the one thing that I was missing and what got me in actually was this error there, right? So this one, you'll note, it looks almost identical to AMAT, right? AMAT had the double bottom here. So in this case, what would I need to see to stay in this, right? Because you see how the squeeze is actually has a negative bias to it. So I may actually cut this today. What I would need to see here to give me full conviction in the trade is an arrow or a change in the one that's missing. So if you look at the indicators, that's good, that's good, that's good, that's good, and this is good. The one thing that's a little out of kilter, and it's not by much, but it is out of kilter, this. You see how it's pushing lower right there? What you need to see is just that to reverse. Basically, you want to see this. So, and here's the thing. We don't know exactly when that will happen, right? We don't know if it'll happen here, if it'll reverse here, which it could, very similar to this, or where it'll have to come all the way back down and give you an arrow there, right? So this one would be a little bit of a wait and see type of situation until I get the next signal. Yes. It's a little bit tough to show you examples of pullbacks to the 21, especially since we've basically only looked at tech stocks because there has been no real pullbacks to the 21 on tech stocks. So you have to use usually shorter term time frames to find them. So ZS is probably the sloppy we've looked at. So over here on the weekly, bullish, bearish, neutral. What would we say? It's neutral. It's below the 200. Moving averages are below the 200. Now you can get big moves out of neutral stocks, but if you're just looking at it on a weekly time frame, it is a neutral setup. That's a little bit neutral as well. So the cool thing is, if you're using, let's say you're using a slow stochastic, right? I'm just going to use the free one just so that everybody can be on board. Notice that you have a weekly that's neutral. When you have a neutral setup here, you need to see the, in my case, you need to see the arrows. If you're using a slow stochastic, you would need to see a bullish crossover. Notice how it gave you sell signals way back here, and it doesn't tell you to do anything until very recently, right? So you wouldn't be doing anything until you see those arrows. At this point, that gets a check. If we look at the daily chart here, this is still a neutral setup. Why? Because your 200 sloping down. See it? While the 21 and the 50 are doing that. So this is actually still a neutral setup. This is why I called it the sloppiest one that we've looked at, because the other ones had a better pattern, trend. But also note how strong this is on the hourly chart. On the hourly chart, it's unbelievably trend, right? So we can't trade this as a trend on this time frame or this time frame, but we can trade it as a trend on this time frame. So what are we looking for here? Well, what pattern? What line is it bouncing off of religiously over here on the right hand side? Because notice again, we don't have trend anywhere leading up to the hourly. Now the cool thing is, if it stays this strong, eventually the hourly will turn the daily into trend. If it stays that strong, eventually the daily will turn the weekly into trend. But we cannot look at this as trend on this time frame or this time frame, but we definitely do on this time frame. Okay, so then what is the pattern that we see on the one trending chart, one trending time frame that we see? It holds the 50 pretty religiously, right? So then what do you need? Well, let's say you're using the 50, and I'm just going to go back and use kind of this this example from here. Although I could use this one too, and frankly, I could use this one too. So the 50 is our level, right? In this case, this isn't a very aggressive setup. because normally you would want to be doing this on a day chart, but you can understand what we're doing here. The hourly is very strong trend. So in this case, L, the level, would be the hourly 50. The momentum signal on the hourly chart is all good. That's a picture right there. That looks beautiful, right? So then what are you missing? Well, the only thing that you're missing is your arrows or a bullish crossover on your momentum indicator, whatever it happens to be. Then at that point, we actually do have a check. Once we've gone from L and M, then we just look for a trigger. A trigger, I would drill down to a smaller time frame. You can use a 15-minute, you can use a 5, and then just look bullish crossover in your moving averages. So a little bit of a tough one here, but very good in terms of saying, okay, well, the weekly's not in trend, the weekly's not in trend, the daily's not in trend. What is in trend? The hourly. Therefore, I focus on this and get my signals from here. If so, then let's kind of round out the idea. Since we know the 50 is the pattern, right? That's pretty obvious. What would break this trade? Because do we have enough support over here or here yet? And we don't, right? We don't. So what would break? Probably a break of the 50. So if you were to get a break of the 50 and you then had a sell signal here, that would then bust the trade. And then you'd have to look for a new setup. But overall, this is a very strong hourly chart. Really impressive, actually. This isn't something that I looked at very often, but you can see the lift here is just gorgeous. If you can get this, I mean, this is your signal here. Let's just keep it simple. Right there. Squeeze. Trend oscillator, beautiful. Double green boy in the center. Yum. That's a great setup on an hourly chart. Did I close IWM short? No, I have not. I have not. I don't like to cover it when it was up 3 sigma. So because it hasn't had a pullback, and we have so much time left on the trade, I chose not to cover it. So we'll see if this develops. If it starts to catch on support here, I'm pulling it up now. It's going kind of slowly since I'm broadcasting on YouTube and here. I should check YouTube to see if anybody's asking any questions. But I don't know how to do that. So I won't worry about it. No, I haven't yet. I have not. It would get me to cover it. If we come down here to, so it's just pattern recognition, right? This one's a lot like Zia. Do we have weekly trend here? Definitely not, right? That is a cluster. That is a dumpster fire of sideways. How about on the daily? Do we have trend? Also not, right? Your moving averages look like spaghetti, all sideways. So you don't have trend here. You don't have trend here. How about on the hourly chart? See how it's holding the 21. So what would get me to cover this trade? If on the next of the 21 it actually holds, then I would have to cover the trade. But it hasn't tested the 21. So ideally, what I would like to see happen here is it comes back, tests the 21, breaks. Where do you think it goes after that? Probably the 50. And then guess what? I get to play that game all over again. So because I'm short WM, I would prefer that it breaks the 50, right? If it holds the 50, then I would cover the trade. Let's say that it breaks the 50. Let's say I get really lucky. Where would I look next? And frankly, if it gets down there, I think I'm good. But in the near term, if it comes down to the hourly 21 and it holds, I have to exit the trade. What moving averages are being used? The 1 EMA, the 50 SMA, the 200 SMA. You can use whatever moving average you want. I wouldn't have too many of them. I think if you have over 4, you probably have too many. right? They should have a lot in between them too. Like one thing I don't like seeing necessarily is folks that will have like the 5, the 8, the 13, the 21, the 34, the 55, the 89, the 100, and the 200, right? And then it has like just a band of moving averages, and they're like, oh, look, it hit that one. Like, you have 20 moving averages. Of course it hit one of them. So if you can boil it down to just what you think is the most important ones, and frankly, in my opinion, it is the 21 for trend, the 50 for structure, well, the 21 for strong trend, the 50 for weak trend, and then the 200 for structure. If you're above the 200, that's positive. If you're below the 200, that's bearish. If you're above the 50, you have weak trend. If you're above the 21, strong trend. So the lesson there is don't have too many moving averages. Dash is interesting because it hasn't existed long enough to have a weekly 200. So it skews it just a bit. But let's just play the game. So what's the game? We're looking for moving averages with an angle up, and we're looking at the condition of the momentum indicators. So would I say that's bullish? Not fully. I think this is all this bullish. I wouldn't necessarily mind that, but it's early. I'm going to give it an NA. I think specifically I would call it probably neutral bull. Little NA plus there. The squeeze, that's pretty bullish. The trend oscillator, both lines are way up here. That's just a function of the fact that the stock hasn't existed that much, that long. That actually is going to be an NA. And guess what? Because it's neutral, you then have to rely, and the same thing would apply with your indicator. So let's say you're using a MACD for your momentum, and you're using a slow stochastic for your range. If your MACD is sloppy, right? If it's kind of like maybe if it's flat or if it keeps crossing, the two lines keep crossing one over the other, guess what you do? That is information. You ignore it and you look at your lower indicator. In this case, because it's neutral, I then have to rely on this. It's kind of like your rifle and your sidearm kind of thing. So NA, check, NA, check. On the daily chart, I think it's a little optimistic to say that's trend. You can split it either way. The 200 would need a turn, and it just hasn't yet. See how it's flat? So I'm being kind of very conservative here with my definition of trend. I want to see it look like this. I don't want to, I don't want to compromise. And I think calling this trend here is a little compromise, so I'm not going to do that. You could, but I'm not going to. So that's an NA. The squeeze, that's a really good looking squeeze. The trend oscillator, both lines are correct, but you see how they're both below 50? So that is, what is that going to be? It's going to be an NA, right? You'll end up with a lot of NAs, and that's okay. But notice we actually haven't seen one that's bearish. Nobody's brought up anything bearish yet. And then the hourly. I think you asked about the hourly here. So the hourly is clean. That's exactly what you want to see. I misnamed this one. This one should be NA. The squeeze, that's a good looking squeeze. That gets a check. Trend oscillator, both lines above 50, green above red. That gets a check. High-low pro, nice little buy signal there in the middle. That gets a check. Okay. So we do this just so that we understand whether we even want to trade the damn thing, right? And this would be something that you'd want to trade long for the most part. So then ask yourself, well, what is the pattern? In this case, the pattern actually kind of not as clean as you'd like, but it's mostly closing above that 21. So what you'd want to see next time that it gets to the 21, which is just like 40 cents lower, what you would want to see is an arrow there or no sell signal. As it sits LMT, your level is here. I think a better level is here, but let's go with the one that's working. That gets a check. The momentum is already good, right? The last signal is still valid. These are good momentum signals. That squeeze is a good momentum signal. That already gets a check. The one thing that you're missing here is just a trigger. Now, there probably is one. If I drill down to like a 5-minute chart, I could probably find one, but that's basically it. So you'd need to see it come down to the 70 strike and then keep this exact profile, and it would be a buy. Not a bad looking chart. Kind of a tough trade though. I've traded Dash like twice this year, and it's bitten me both times, which is kind of ironic considering how much I use Dash as a service. But overall, this is as good as it's looked, and the buy zone be right around that 70 strike. Assuming nothing changes, you don't get any sell signals. With the weekly indicated divergence with the trend loss in price on what ticker, Paul? Give me a ticker. ON is going to be pretty clean here. Kind of kicking myself. I should have caught this one. It was on my watch list. I talked to you guys about it. It had all the right signals, and I got busy trading the ES instead. So we're all experts on this, so I'm just going to use checks, minuses, and ends for neutral. So that grades out pretty good. 11 out of 12. That's really bullish. Mind you, you could have a negative number here. So it's not like 0 is we're starting from negative 12 to positive 12. So an 11 out of 12, that's really, really bullish. So this is a stock that we want to trade long, right? Immediately. Now you can do this. The cool thing is you can do this with like 2 different stocks. And if one is a 10, one is an 11, just go with the 11, right? It's just a quick way of telling you how to grade things out. So this is something we definitely want to trade long. Where do we want to be doing these things? Well, the strongest trend that I see is probably on the hourly chart. The level that I have is going to be right here. I'm just using a previous high in this case, right? So the thing is, the signal happened already. So then I have to wait for the next bus. So my expected level that I'm looking at is the previous highs from that candle here. Now I could get an earlier level. You could probably even use the 21. The thing is, we don't know exactly where the level will be. We're going to be looking there at the 21. I think that's valid. So that's 89 bucks, 89.14 to be exact, or 87.41 the previous highs. We don't know where the level is going to be, but we know where they are. We just don't know which one it'll be. What I'll be looking for when it gets to that level, which is the aggressive level, would be something exactly like this, right? Now, guess what I do? If it gets to the green line there, the 21, and I do not have an arrow that tells me to buy it there, well, then I have a level, but I don't have the right momentum. And if I don't have the momentum, I don't have a trade. So let's just kind of sketch it out. Let's say that this isn't the level, and it's actually going to come back down here. Okay, so it doesn't work there. We're just kind of making assumptions. Let's say it's sitting at 87.41. Now, this seems like a lot, but it'll be very quick when you do it because you don't have to talk it out. Let's say it's sitting at 87.41. So do we have a level there? We do. You'll find levels are a dime a dozen, but you have a level there. Would you need to see at 87.41? Well, the weekly chart's already good. The daily chart's already good. So in the event that it comes down to 87.41, you want to see it do exactly this. It's going to give you a white arrow and then immediately give you a green arrow. Let's work with our assumptions here, right? We're just kind of doing a hypothetical. If you get that, basically what I just circled, then you'll have the right momentum, and that would be an entry. is a very good chart. This is an extremely good chart. You have that weekly squeeze on the back of it. You have a monthly squeeze. That's unnecessary. As it sits here, it's not quite at a level where I could do something with it. The earliest level would be the hourly 21. A much better level is the hourly 50. So you were talking about a weekly divergence with Trendos and price on ZS. Let's see. Interesting that the market's going a little bit lower and IWM is holding up here. Quite impressive. Weekly divergence. I'm not sure what you mean by that, Paul. I'll show you a divergence, but usually when I talk about divergences in my language, and there's a lot of different terminology you can use, I suppose. Is divergence for me is something like I'm trying to find one on this chart. I don't see. Divergence for me would be price does this while momentum does that. Right? So I can give you an example. This is probably like the best example ever of a divergence. So this is nat gas. We all know what nat gas did. It went from 2 to 10 and then back to 2. That's a big move. You see high here. You have a higher high, and then you have your final highest high. See how the indicator made a high here on the first high, and then on the second higher price high, it made a lower high, and then here it makes a third lower high. Usually these come in threes. You can even see it on the weekly chart. Indicator down, price up, price up. 3 pulses. I usually call them pulses. 3 pulses up, 3 pulses down. When you get that, that's a really unstable situation. And especially they tend to happen in threes for what it's worth. It doesn't have to happen in threes, but the strongest ones tend to happen in threes. And you can see that from 10, it went all the way down to $2, 80% drop. Why? Because the move was not supported by momentum. You have 3 pulses higher, 3 pulses lower. So that's my definition of a divergence. Actually, let me show you another one. There is one. Show you one more. There was actually a giant positive divergence into the NASDAQ before it took off. I was in the gold room. I was short the ES from 88. I got to talking and babbing like I do. It spiked up to 98 on me. I didn't take any action. We are at 87. I could lock it up for a point, which is probably the smart thing to do, considering I let it go 10 against me. But I'm not going to. Don't do that, folks, by the way. Don't get on the mic with your best friends and forget about your open futures position. It's not great. I'm very lucky that it came back down. I could get out here for 2 points. I'm not going to. You see on the cues there, price went down. See on the indicator, price, the momentum is actually up. And then look what ends up happening. Right. So that, and I know that we're probably saying the same thing there, but that's my definition of, just for anyone who didn't know, that's my definition of a divergence. So I'll go back to ZS here and see if I can see what you're talking about. Are we best friends? Yeah, all 186 of you guys are all going to be invited to my wedding. You know what? I'm not going to be a pig. That was dumb to let that go that much against me. Un momento, por favor. All right, that's one. Two. And we're good. Let's see. Maybe I need to expand my point of nope, never mind. No, I don't see it, Paul. I don't see it on the weekly. No, on the weekly, this just looks exactly like what you would expect. I'm gonna make this easier to read because right now there's a lot of crap on your screen there. And again, let me know if I'm maybe not seeing what you're talking about there, but this is just normal. You have a low here and a lower low here, and the indicator has a low here and a slightly lower low there. So the indicator looks like price. So there's nothing out of the ordinary there. Now you'll know it when you see it. If you have the, I think you have the indicators. You could see a really dramatic example on the QQQ, on a bullish divergence at the lows. I think there's actually one on the IWM that developed. Don't quote me on that. There's definitely one on the SPY, the QQQ, the natural gas is the most extreme example, and I think actually Tesla. So I'll actually, since you got me going down this road, I'll show you one more. And then I should probably wrap it up. This was only a 30-minute session. My thought process was, as long as I'm talking and the ES is falling, we don't have to do anything. So we are a little bit off track here. Well worth it, I think. So this doesn't seem like that big of a drop because the chart is condensed, but this I can promise you, this did go from 400 down to 100. So the divergence, there's a high, there's a much higher high, the indicator printing lower and lower and lower. The moment that this structure starts to break, you give it all back. So they'll stand out when you see them quite a bit. All right, so well, you still get a check for the dash hourly squeeze, even though it's dark blue. Let's go back and check on that one, and then I'll do one more, and we'll give you guys a little bit of a break here. Also, keep this in mind while we're saying this. This is also pretty important. So when you're doing individual stock analysis, I do think that LMT should be done every time, right? But also don't forget Dash or On or Tesla or Amazon or Exxon. These are all just boats on the ocean, right? So because they're all boats on the ocean, have an understanding at least of what the neighborhood or what the ocean, to mix metaphors, looks like, right? Because what you don't want to do, and this is really common, and it still happens to me, so I've been in this game forever, is you'll look at a chart, right? It'll be just the perfect chart, and then the index is down like 2%. And then what happens to your stock? It gets hit, because it doesn't matter how good your stock looks if the index is down 2%. So remember to do this, not just on the stock that you're planning on trading, let's say it's Dash, but also take the time to do it on something like the QQQ, right? Because Dash is tech, just make sure that the QQQ is playable, and then you can do it on Dash. And I promise you, if you can do it quickly, you'll be able to do it quickly. It seems like it's taken me a long time because, again, I have to articulate all this stuff to you guys, but it's all good. The hourly, I wouldn't say there's any issues here. I wouldn't say there's any issues here quite just yet. At a level, right? So again, a very aggressive level is here. A much less aggressive level is here. So I'm not quite at a level to yet make a decision. But I would say overall, this still checks out. The hourly is still completely intact. I don't know if my level will be here or here. So what I would be looking for is just to see what the reaction is at that level. And we just frankly haven't got it yet. You're saying it's dark blue. Generally speaking, I think this is fine. Yeah, generally speaking, I think this is okay. At worst, at the very, very worst, if you're really being conservative, you would just say that's neutral. All right, last one. Disney. Disney. Now, I have to throw this out there. You didn't ask for my opinion, but I'm going to give it to you anyways. I think Disney is probably one of the worst stocks you could possibly be in. It hasn't, if you go back and you look at like a monthly chart on Disney, actually, we could just do it here on a weekly chart. What has Disney done from 2015 until 2023? And mind you, this is all opinion at this point, but I think it's backed up by the charts. There's 8 years of data here. Look, it's the same price it was at in 2015. And you've had COVID and money printing, and the entire stock market is up, and Disney doesn't pay a dividend. So it's like, ooh, if you held it for 8 years exactly even, and you haven't even collected a dividend payment, you take a big trip up and a big trip down. But if you just held it that whole time, it hasn't done anything. So Disney's one of my least favorite stocks for that reason. On Disney, let's just run the process real quick because I think this one's probably the worst one that's come up by far. So this one's actually almost fully bearish here. So if we look at the weekly chart, red, blue, green, all angled, that's bearish. That's our first X. The squeeze histogram, you don't yet have to, what I want to see is 2 bars against the grain, at least 2 bars. And you see how it's all red bars? X. This, at best, that's bear neutral. I'm actually just going to say that's bearish because the green line is so far the middle, and your last signals are actually sell signals. So immediately, I wouldn't be looking to trade this. On the daily chart, red, blue, green, that's bearish. Squeeze histogram, that's fine. It's not bullish. It's not bearish. It's neutralizing. The trend oscillator, red is above the green. Both are below the middle. And again, when I show you this, just apply your own indicators, right? You'll be able to do this with a MACD. You want to make sure that your MACD is above, if you had a MACD, you want to make sure it's positively crossed and that both lines are above 0. Same idea. And then the last signal you have, sell signal. Okay. The hourly starting to show a little bit of promise. But you'll see it's actually not even in trend. So I remember somebody brought up ZS, and ZS had sideways here and here, but ZS had super strong hourly trend. Disney doesn't really have that yet, right? 200 is on top. So X, this would not be something I'd be looking to trade long. If anything, I would be looking for a short here. So the level that I would be looking at to short it, it's probably right about the 50, all right? So let's make another assumption. Let's say it gets at the 50. Let's say it was at the 50 right now, 96.25. What would I need to see? I would need to see an hourly sell signal at the 50, and that would trigger me in short. More aggressively, you could short it here as well, the hourly 200. Why? Because you see how it hasn't been tested. So when it's sharply sloping down and it has not been tested, you can use that as a short. A lot of folks will just open up a short there. That's not what I want you to do. If you are thinking, if you would consider shorting there, that's just one part of our equation. So this is a good one to close out on. L, M, looks like Batman more than an M. LMT. So let's say we wanted to be very aggressive. We're looking to short there. Okay, cool. 94 bucks. You have a level. Does the momentum suggest that we should be shorting as it looks? No, not right now. So let's make an assumption. You get 94, and then you get an arrow there, and this crosses. Then LMT, you have a level, you have the right momentum, and then you just look for a trigger. Guess what happens if it gets to 94 and we don't get the sell signals? What do? We don't do anything, right? We would look for the next level, which would be 96. And then we just repeat the process. Do we have the signals? If we have the signals at 96, then we do. Personally, I wouldn't be looking at this long. Even if it works, I don't think you can necessarily make a career out of trading something like this long. I think if you're looking at Disney, then Disney is an XLC, and I would rather see you trade XLC. Right? Disney's the XLC is the neighborhood. Disney is like that one house that doesn't cut the lawn and has a bunch of beer cans on the front yard, right? Like it's a good neighborhood, bad house. So I would not look at it as a continuation. See, look at the neighborhood here. See how this is really starting to shape up? I'd rather trade. And guess what? If Disney works, this goes higher, and it's much easier. So I'll go ahead and cut it off there, guys. We went a little bit over 20 minutes or so, but I think it was generally helpful. So if you have any questions on that, just shoot me an email or maybe join me back in here next time. But basically, kind of just to put a point on everything, try to do this analysis with everything that you do. Don't just look at a level and say, I'm going to take action there without making sure that you have some kind of a momentum signal at that level. If you get the momentum signal, take the trade, have a stop above the level. If you get to a level and you don't get a momentum signal, guess what you do? You sit on your hands and you wait. No signal, no trade. All right, guys, that's my time. Thanks for keeping it lively. Appreciate you. See you next time. Cheers.